Welcome to the Contractor Success Map podcast. I'm your host, Bradley Hart, and I'm an expert on how you can get the most out of your contracting company. The reason I designed this show is to help you turn your contracting company from a people-dependent money pit into a process-dependent cash cow to have the freedom you dreamed of when you started your business. Every Friday, we're releasing podcasts with information to help you get the most out of your contracting company. Be sure to join us at www.contractorsuccessmap.com. and subscribe to receive our latest articles and special offers. And the best part, it's all free, just for you.
Hello there. Welcome back or welcome to our podcast. I hope you are doing great and in excellent health. This is Nor Halma delivering our 501st episode by Sherry DeHart. You can listen to the other sessions on iTunes, Spotify, or wherever podcast content is published. It's non-sequential. You can listen to the topics that interest you the most. Sherry's post today is entitled Key Drivers to Improve Construction Profitability and Cash Flow. Let's get into it. Enlightened contractors like you understand the value of developing your own unique construction contracting system, a collection of documented, repeatable processes and operation manuals. The key is continuously refining your construction company's practices and procedures. Your office ensures your contracting company has a steady flow of projects. Proper accounting and bookkeeping develop timely financial reports to show which jobs are profitable so you can pursue more. Thus, you can focus more on the following: acquiring the right clients, doing the project as close to on time and budget as possible, get job deposits and timely progress payments, and follow up with clients to monitor satisfaction and line up new projects. Boost profitability by recognizing your key drivers. Identifying the key drivers of your business is critical to boosting profitability. A key driver significantly impacts your specific construction business's performance. A whole range of factors can affect the performance of every business. The secret is to focus on a handful of drivers that affect the performance of your business significantly, are measurable, can be compared to a benchmark such as last year's figures or an industry average, and can be acted upon. Make use of benchmarking. Use past figures as a benchmark for current performance. Figures for last year or last quarter provide hard facts and established patterns that expose potential problems and opportunities. Also, compare your construction business with other similar companies, especially competitors. Your accountant, bank manager, or industry association may be able to supply industry benchmarks. What are some of the key drivers in business? Critical drivers vary from business to business, and in construction businesses, they include sales lead in capital goods or service, market share where only the biggest will survive, and the first-time fix in a maintenance business. Even direct competitors may have different drivers. A prime location is not a key driver for a floor installation business, but it is for a brick-and-mortar competitor that relies on a well-located retail store if they sell hardwood flooring and carpet and provide installation services. Some of the following drivers might be relevant to your business. First, converting leads into sales. The number of leads, information requests, or quotes given provides early warning of any peaks or downturns in your sales. If you have an established leads to sales conversion ratio and know the size of an average sale, you can use the pace of leads to forecast sales. Monitoring sales figures can show which categories of products are selling well, what each salesperson has achieved, if lead conversion rates are improving, and it keeps your costs under control. Maintaining a healthy gross profit margin is critical. If your gross margin percentage is falling, take swift corrective action. The causes could include higher input prices, a changing product mix, production inefficiencies, or excessive discounting. If you run a service business that bills out time, it can be helpful to treat consultants' salaries as a variable rather than overhead cost because this makes it easier to work out who is making you money. Second, collecting receivables efficiently. Your accounts receivable collection period, the number of days on average to collect customer payments, is an important driver to monitor. Try to improve your past performance and at least match the industry standard. If the standard is 35 days and you take 45 days on average to receive customer payments, then improve your collection activities immediately. Bill promptly and highlight overdue payments for prompt action. The key is consistency. Late payers should know that you'll unfailingly contact them. Third, optimal inventory levels. Your inventory turnover rate is the ratio of cost of sales to inventory. Most businesses aim for a high inventory turnover rate because it indicates an efficient use of capital resources. If the ratio decreases, find out why. For example, you may be overbuying or purchasing inventory you cannot sell. The more you can break down your inventory figures into separate product categories, the easier it will be to pinpoint problems. Fourth, hours billed. An interior designing firm had a disappointing level of monthly sales for years until the owners realized that hours billed per consultant per week was the key driver. Once they began monitoring this, they could see which consultants were earning the revenue. The firm could then target small and manageable improvements, such as billing 30 minutes more a day each. Attitudes changed overnight, and sales increased significantly. Fifth, turning over staff. A plumbing company recognized that staff turnover was their driver. A skilled plumber with sales experience was 3 times more productive than a new recruit. The recruitment and training process for new salespeople also significantly burdened the business. The plumbing company introduced a long-term incentive into salary packages to reduce staff turnover. It also introduced quarterly performance reviews. And sixth, defective or wrong goods. A painting supply and service business found that the defect ratio was a driver. Defects or wrong paint color led to goods being returned. Extra time wasted on rework, delays in payment, and lower profit for the business. The company reorganized the workforce into quality cells, and productivity increased significantly. Identifying the 5 key drivers you need to focus on. What key factors enable your small construction business to outperform its competitors? Try to identify the 5 key drivers you need to focus on. The questions you need to ask yourself are: what drives the sales figures? What drives the cost? What drives the cash flow? Final thoughts. By optimizing these key drivers, successful contractors understand how and why the construction business cycle works. Cost is what you see. The profit potential is what you don't see. High-profit construction company owners focus on both and understand that it takes money to make money. Next steps. What gets measured gets managed. After learning your key drivers, it's time to understand your reports and use them to your advantage. Enroll in our 5 key performance indicators for contractors class in our constructionaccountingacademy.com website. Discover insightful lessons with actionable tips for your bookkeeping processes with our 5 Key Performance Indicators online course. Get your reports done with our 5 at 5 for 5 approach and improved practices. And that ends Sherry's blog post. Want to chat about growing your construction business? Please don't hesitate to get in touch with Sherry. You can email her at Sherry, Sherry, Sherry at fasteasyaccounting.com, or you can give her a call. This is a direct access to her at 1-800-361-1770 or our local US phone line 206-361-3950. And yes, our promo code is still available for you to use if you would like to enroll in our 5 Key Performance Indicators course. As I mentioned, it's for a 20% discount. Also, you can use it in our Fast Easy Accounting store for any of our bookkeeping templates. Our promo code is podcast20, PODCAST20, podcast20. Links to our online store and academy are in our blog. Just head on over to fasteasyaccounting.com and all the links are there. On behalf of Sherry and our team at Fast Easy Accounting, this is Norhalma. Thank you all for listening. Stay safe and healthy.
And stay tuned for upcoming episodes on how to turn your contracting company into a process-dependent cash cow. Bye for now. Thanks for tuning in. You're listening to the Contractor Success Map. If you enjoyed the show, please leave a 5-star rating and review here on iTunes, and make sure to head over to www.contractorsuccessmap.com to subscribe to receive the latest articles and special offers. If you'd like to discuss your business strategy, simply click on the button labeled Strategy Session. And the best part, it's all free, just for you.